Stocks popped big time as the message in the market today was really intriguing. Think about this. All right, you saw defense sectors like utilities and real estate. They really took it on the chin, and we saw a rotation back into other parts of the equity market. And, well, what stood out for me is money flowing into areas other than tech. I mean, tech still finished higher. This even after Morgan Stanley lowered the rating on the whole sector, the XLK. Financials, though, they enjoyed the best session of the day. And it's now becoming, for many, an easy play now to own some financials ahead of Friday when you've got four big banks that are going to post results. Each had great sessions today, led by J.P. Morgan, up more than 3%. I'm going to try and do a special preview on those earnings tomorrow night. Now, the big news is the search for value, though, continues as oversold stocks, even those that had recently bad news, are looking pretty good. They had a solid session today. Industrials, they led the way. Caterpillar, United Rentals, which I love, Deere, all posted strong sessions. Consumer discretionary, you saw Helen of Troy out the gate before they opened. Earnings crushed it, inspiring investors to look for other value there. They were buying Royal Caribbean, Chipotle, Advance Auto Parts, stocks that have been hit hard over the last few months. I also think investors are looking beyond the headlines that predict defeat for President Trump in his tariff battle. I mean, think about this. Even if all $34 billion in China's retaliatory tariffs hit only red states, that would be 7% of the exports. We're talking of approximately $500 billion. And if you took the tariff, it would be $8.5 billion, 1.7% hit to the Chinese consumer. They would probably absorb almost all of it. The fact of the matter is, China's retaliatory tariffs will be less than 1% of red state exports, at least so far. So it's inconsequential, and I think we're winning that. Meanwhile, coming into the session, think about this. The scoreboard shows that we were winning. Year to date, the Shenzhen down 17%, down 50% from June of 2015. Shanghai down 15%, down 54% from June of 2015. The Dow was unchanged, but it's plus for the year now. S&P was up almost 4%, NASDAQ 12%, and the Russell up 11%. Portfolio exposure, in addition to owning more value, I think investors can also keep a part of their portfolio to chasing these breakouts. And the thing is, of course, if you do that, it means more volatility and you have to be vigilant. But case in point, today, market breadth became decidedly bullish again. On the New York Stock Exchange, 132 new 52-week highs, only 14 stocks at new lows. On NASDAQ, 157 new highs against only 33 new lows. Of course, the market remains range-bound, so I would wait to become very aggressive with a close on the Dow at 25,322. That's when you would do it.